Hello, everybody. My name is Pinaki. I'm a product manager working in banking transformation for past 16 years. In these 16 years, I have seen uh, how banks evolve from the traditional models to currently the completely digital model. Um, as part of today's topic, I thought of giving you the basics or foundation of banking, so that when we get into the depth of complete complicated jargons, it would be much appealing to you. I hope you would find it interesting. So let's start. So the key takeaways from today's session would be the outline of various financial institutions and what they are. And the second point also would be who they serve. It might be retailer, it might be corporate, who they serve. Okay. So broadly, if you look at financial institutions, we can divide financial institutions into four broad categories as for their functions. What functional groups, probably we can say that. So let's look at them. The first one is repository or a traditional bank, what we call it. So we must be seeing ICICI Bank, or must be seeing looking at JP Morgan, or a lot of other banks which are there across the streets that we see, right? So these are actually traditional banks or deposit traditional banks, right? Now, the second one is about investment firms or investment bankers, what we call them. So these deal with investments those are received from their customers, right? So customers go to them for making investments. The third one is regarding insurance. So we have different kinds of insurance need throughout our life, and for them whom we approach, those are actually insurance service providers, right? The fourth one, or basically who are not coming under any of these categories, can be called as non-banking financial companies. So where they serve different kinds of purpose, but yeah, uh, these are not necessarily or not banks, right? So let's get into little depth of each of these. Now, depository or traditional banks, right? So normally, if you see commercial banks, right? So commercial banks, if I give an example here, um, you would have heard about US banks like, let's say, JP Morgan or Wells Fargo. So they have their division where they act like bankers for the banks, right? That is commercial bank. So when a retail bank needs money, they would approach commercial banks to give them, right? So on that basis, those are called as commercial banks. So understand this as bankers bank, right? Uh, then there are credit unions, as we know that there are a lot of credit unions which are there across geography, who actually help in terms of uh, financial institutions that owned or controlled their own members, who also have their customers, provide similar services of banks, but these are slightly different from banks. We'll see that in our forthcoming sessions. Now, the third ones are savings banks. So, wherein they accept or they create current account, savings account called as CASA, um, uh, deposit accounts where and the customers can deposit their funds and withdraw whenever they require. So, savings bank. And the last one, but not the least, are loan associations. So under this, loan associations, normally we see uh, LSPs or loan service providers also come here, and the wholesale bankers, as we are talking about, who lend to LSPs, also come here, right? Now, if we do a broad level categorization, whom they serve, right? So you will see depository or traditional banks serve both retail segment or SME segment. So when I call retail segment, it is normal public like us. So if it is a SME, small and medium scale enterprises who get funded, or who get loans, or who can give their deposits. Or it might be commercial sector, so where they serve only banks or only bigger corporates, right? So on that basis, your traditional banks can be divided into retail slash SME or commercial, right? uh, if I talk about investment banks, one of them is pure your investment bankers, as in, let's say, Morgan Stanley, right? So they are pure investment banks where people will come, give their money, and then they invest in a lot of assets. Brokerages, there might be brokerage firms. ICICI has the brokerage, ICICI Direct, so wherein you can open your demat account, you can invest through them in share markets, in mutual funds, in ETFs. These are brokerages. Um, Third one is mutual fund firms. So wherein you would have seen a lot of mutual funds uh, being created by these financial institutions. In some cases, they also uh, combine or group the mutual funds which are given by other financial institution and provide them to their uh, customers, right? And the fourth category would be pensioner hedge funds, right? So wherein so they also serve a similar purpose, but they basically work on safe deposits kind of thing. So pensions and hedge funds are one of this. Now, looking at whom they serve, this also can serve retail and corporate, right? So if you see ICICI Bank's division or SBA Bank's division, they serve primarily retail customers. But if you see JP Morgan, right, or Morgan Stanley, they primarily serve corporate customers. So based on that, it can be divided. Let's move to insurance. So we know multiple types of insurance. Some of these are basically used for retail that we know. So, for example, your life insurances or your health insurance that we take for all our medical expenses. It might be property insurance or casualty insurance, right? Other kind of insurance might be auto or equipment. So, if you see, you do your vehicle insurances, or a manufacturer, a big scale company, they do it for their heavy equipments, right? So they come under auto and equipment insurance. Now there can be credit insurances, right? So credit insurances are you get this FLDG, or first loss default guarantee players, right? So if your borrowers of your loan do not pay, then they can approach FLDG players, and FLDG players will pay for the loss, right? So these are credit insurance companies which are there. Reinsurance, so this is like insurer's insurer. So one insurer has already created a contract with another insurer who pays in case he has to pay an insurance, right? Now, the next category is specialty. So, wherein this is you understand this as high risk niche segment, where might be aviation sector or some other sector who has high risk and a niche, and they take specialty insurance. The premium would be slightly higher, right? Um, in the other companies who are categorized under insurance are annuity companies, right? So, who take funds from you, provide a certain insurance, and at the end of that term, pay customers as pensions. So, annuity companies also come under this. Now, mutual insurance or cooperatives, where this actually belongs to the policy holders. So, policy holders tie a group or form a group, and they uh, create an arrangement that insures them in case anything happens with one or multiple parties, or one or multiple policyholders involved, right? And the other things, last but not the least, are the natural disaster insurance. You would have heard about flood insurance and all, right? So those come under natural disaster insurance category. Uh, so, whom they serve? Again, similar to your investment, you can get insurance for retail customers, or you can get for companies or corporates or insurance companies, as we talked about. So these are retail and corporate level. Now, the last one in this category is NBFCs. Now, we see a major evolution in terms of NBFCs what they were before 10 years and now what they are. You would see probably a player in every sector now. So these are basically, you would see a lot of companies, banks who have come in a co-lending model, who has tied up with a bank and offer you loan services, right? So they have bigger customer base, and they can utilize money from a co-lender to give lending, right? So non-banking lenders are there. Now there are account aggregators. So if you would have heard about Perfius or some companies who actually are responsible, they have got licensed by Indian government this time to be acting as a non-banking player, wherein they can keep data of customers, specifically SME customers. Retail customer is also allowed, and act as a kind of aid or additional information provider to the credit bureaus who are there. uh, Now, default guarantee players. So normally you see, I was talking about FLDG. Normally you see default guarantee players are there in market, who are actually, the number is decreasing now because of a lot of regulations that have come to market of co-lending, related to co-lending. But still, these players are there, and it is very important to have those players also. There are payment processors. You would have, if you see, there are a lot of companies who act or who create that bridge of making payment a seamless process, coordinating with multiple parties, right? So these are payment processors. Venture capital firms, so where these firms actually provide funding to a lot of small startups, or or probably a incubating company, right? So these are venture capital firms. They also take interest, they get share capital. In form of that, they make their revenue or make their returns. Now there can be private equity firms as well, right? Now, there is no specific segment to which NBFCs serve. Basically, as per the association of all these other players, association with all these other players, NBFCs can serve pretty well to every types of customer, right? So that is why whatever is not fulfilled by our first three parties in the financial institutions, the NBFCs are bridging that gap, and that's why they are flourishing at a very high rate. So that is probably the high level structure of what are different financial institutions which are there. Hope this video has been able to create a foundation for you to get into depth. Uh, Please do share and subscribe. uh, Give me a like if you like it. Otherwise, am happy to take your comments to improve my videos. Thanks a lot. See you in next videos.